this oil deal pretty much calibrated and expected. We had oil easing just last week in anticipation of the deal. Does it move the needle?
It really shouldn't move the needle. As you said, everybody expected this outcome in one or another variant. There's no surprise in it. And the market does what it does in the short run, but it doesn't mean very much because underneath it all, there are some forces of work that are pulling and hauling in different directions. But on the whole, this is a very tight market. We saw inventories dropping probably by 3 million barrels a day globally last month. We have demand significantly higher despite the COVID pandemic exploding in parts of the world with the Delta variant. But still, we get to August and we're going to have maybe 1.5 million barrels a day, even more than at the end of June. So I think the 400,000 barrels a day put into the market will turn out to be a pittance, and we'll see prices going back a bit higher, if not a lot higher, by the time the summer is over.
Well, prior to the OPEC deal, Ed, you talked about perhaps $80 Brent coming sooner rather than later. How soon will we see that level?
I would not be surprised still to see it sometime in the next 90 days, maybe even before the end of the third quarter. We have, and the IEA has, and the OPEC Secretariat has, everybody in officialdom, as we do, have inventories growing through the end of the year. If inventories are growing globally through the end of the year, the market gets tight, and it's so far tight enough that there's not enough supply to meet demand. So pressure is going to be on the prices upward, and to see a $10 jump over the course of this period of time would not be unusual.
Ed, I mean, is it, again, just a truce, if you will, or is it peace between these two? Because people are suggesting that they are likely to come to loggerheads again. And of course, we had, don't forget, the UAE suggesting earlier this year that they could leave the Organization for Petroleum Exporting Countries.
I think we need to think about the short run as being very noisy and think about where the oil market is heading over the next decade. OPEC has just about run out of the environment in which it prospered. That was an environment in which oil demand was growing relentlessly. We're now in an environment where we can pick, maybe we'll be wrong by a year or two, but we can pick a time when oil demand is going to be peaking. We can see oil demand rising right now because of the optics that happen in the recovery from the worst economic recession since the Great Depression. All commodities have been in commodity boom time because commodity demand just goes haywire. It expands enormously when you move from a recession to growth. So we've seen commodities outperforming 5 quarters in a row. I expect they'll continue to outperform equities and rates and credit for the next couple of quarters, but this will eventually calm down. We've talked a lot about inflation around the world as a result of what we're seeing in a commodity recovery. That commodity recovery really will see demand going down to a lower relationship to GDP growth when things settle out a year from now. So it's not only OPEC not seeing demand growth, but OPEC is in a pickle in terms of where we might see stranded assets going in the future. So it's a very different world. And what this dispute is really about is about a country, namely the UAE, that has found a way out. It's found a way to monetize its resources before they are not of the same value that they are today, and to use that monetization of the resources to change the nature of the economy. That's not going to end anytime soon.
Ed, the thing about all this is, with prices where they are and OPEC being very strict, in some ways at least, isn't this a sort of sweet spot for people to cheat?
It would be a sweet spot for people to cheat if they could cheat. So, who can cheat? The UAE certainly can cheat. Iraq has tried to. Companies are moving out because they don't like the terms, and Iraqi production is peaking. If we look across OPEC countries, more of them have lost production capacity than have gained them. So it's really Saudi Arabia, Russia potentially, not a member of OPEC, but a member of OPEC plus, Kuwait and the UAE, that are the ones that can add significantly more oil to the market anytime soon. It's not a lot of people not a lot of other countries can cheat. And the UAE, sees the wisdom of not making waves right now, but it is going to definitely move to that 5 million barrel a day capacity above the 4 million barrels a day it currently has, and against its 3.2 old guideline, 2.8 million barrel a day quota. Inevitably, they're going to move away and monetize their reserve base and move forward for the world to come.
And given expectations of higher oil from here, how quickly will shale production come back? What kind of numbers are you looking at?
Well, the numbers are wide, but I'll give you a little bit of reality testing. The EIA now has U.S. production at 11.4 million a day. That's the highest level on the way up than it's been since it was on the way down nearly a year ago. So we've seen production growing, and we've seen the private sector really significantly increasing their rig count. We see initial production going up. I think the real issue is what happens to prices between now and the end of the year, and where will the public sector's companies go? Will they keep their production limited to 5%? 5% on a 11 million barrel a day base is still 600,000, 700,000 barrel a day year growth. It could be as much as 1 million barrels a day next year. It's a big unknown in the market, but it can't be counted out. And certainly the OPEC dilemma is getting to a higher price level that encourages well completions, encourages new drilling, and the U.S. has a break-even point for most of shale that's well under the fiscal break-even point of still most OPEC countries. That's still a big dilemma for them.
And before we let you go, we know that Citi said Iran is the biggest wild card for oil prices this year. What impact might Iran have on oil prices?
So the big unknown is really becoming more of a known. Iran had about 1.8 million barrels a day of production a year ago. They have found ways to put basically another 800, 900,000 barrels a day in the market since then. They are trying to get the U.S. to lift sanctions. And the question is, how much can they add to the market? We expect it to be another 1.8 million barrels a day over time. That's a big unknown. But disputes with the United States mean that the expectation that the oil was going to come back in June has passed, and July has passed. We think in August it's passed, and September might be the earliest that these big disputes to get the U.S. to the point of lifting sanctions, getting Iran to the point where they'll accept some limitations on what they are obliged to do under the JCPOA, get going. So Iran doesn't strike me as being the danger to the market for all of the rest of this year. We have them adding another 500,000 barrels a day to our balances for the rest of the year. We still have OPEC adding that 400,000 barrels a day to the market. And things to us continue to look tight through the end of the year, which is why we still think that $80 number is well within reach, depending on where financial flows go, actually. And if we see an uplift in price, we'll see managed money getting longer and putting a bigger lift even on where prices would otherwise be.